Hi everyone, welcome back to Accountant's Desk. Today we will understand cash versus accrual accounting. Whether you are a student, a business owner, or someone learning accounting, this video will give you the complete understanding from basics to real life applications. By the end of this video, you will understand the difference between cash versus accrual accounting, when to use which method, how it affects your profits, and what suits your business best. So let's begin. What is cash basis accounting? According to cash basis accounting, revenue is recorded when cash is received and expenses are recorded when cash is paid. It is easy to track cash flow. That means if no money is exchanged, no entry is recorded. This method is easy to use and helps small businesses to track how much cash they really have at any point in time. It's like checking your wallet. You know exactly what's there and what's gone. Example of cash basis. Let's understand this with a quick example. Suppose you did freelance work in May, but your client paid you rupees 10,000 on June 5th. In cash basis accounting, you will record this income in June, not May. Why? Because that's when you actually received the money. This keeps your records very simple and cash focused. What is accrual basis accounting? Now let's look at the accrual basis, which is more advanced but also more accurate. In accrual accounting, revenue is recorded when earned, not when received, and expenses are recorded when incurred, not when paid. It shows true financial health. It helps businesses match income with the expenses related to earn that income, even if the payment hasn't paid yet. Example for accrual basis accounting. Let's go back to the same freelance example. You provided service worth rupees 10,000 in May and got paid in June. Under accrual basis, you will record that income in May when you actually earned it. Even if the money isn't in your hand yet, it still reflects your performance and business activity. This method is especially helpful when you give credit to customers or receive goods before paying for them. Cash versus accrual. Key difference. In cash basis accounting, cash is recorded when it is received. In accrual basis, it is recorded when it is earned. In cash basis, expenses is recorded when it is paid. In accrual basis, it is recorded when it is incurred. Cash basis accounting is simple. Accrual basis accounting is complex. Cash basis accounting is less accurate. Accrual basis accounting is more accurate. Cash basis accounting is suitable for small businesses. Accrual basis accounting is suitable for growing business. Advantages of cash accounting. Now let's look at the advantages of cash accounting and why so many small businesses prefer it. Simple to maintain. This is major benefit. You don't need complex systems or professional help to get started. You record income when you get paid and expenses when you pay. Great for tracking cash flow. It shows you exactly how much cash is in your business. No confusion with unpaid invoices or future bills. Easier tax filing for small businesses. You only pay tax on the income you actually received. This can help save money in tight months. Helps avoid paying taxes on money not yet received. This is huge relief for small businesses. You don't pay tax on promises. You pay only on actual receipts. Cash accounting is ideal for businesses that deal mostly in cash or don't have inventory. Disadvantages of cash accounting. But cash accounting also comes with some drawbacks you should be aware of. May not show full picture. You might have made a lot of sales, but if the money hasn't come in, it won't show in your records. Misleading for long term. Because it focuses only on cash, it doesn't show what you have earned or owe. It can give a false sense of profit or loss. Not accepted for larger businesses. As your business grows, or if you need to present financials to investors, bankers, or government, cash accounting may not be allowed. So while it's easy, it's not always ideal for every stage of business. Advantages of accrual accounting. Now let's talk about the accrual method, a bit more complex but powerful in understanding true business performance. Gives a clearer picture of business performance. You see income when you earn it and expenses when they happen, giving you an accurate view of profitability. Matches income and expenses accurately. If you spend money to earn income, both are recorded in the same time period. This shows true margins and financial health required by law for many companies. If you operate in multiple countries, deal with inventory, or cross certain income threshold, this method may be mandatory. Powerful in forecasting. Because it includes unpaid invoices and upcoming bills, you can plan future cash needs and growth better. For businesses with more volume or complexity, accrual gives a long-term view. Disadvantages of accrual accounting. Of course, no method is perfect, so here are the challenges with accrual accounting. Complex setup. You will need to understand concepts like accounts receivable, payable, cost of goods sold, and more. It's not always DIY friendly. Requires good tracking. You have to stay on top of invoices, bills, and due dates. Missing entries can affect your financial reports. May pay taxes on unpaid income. This is the tricky part. If you record income before receiving it, you might have to pay tax before getting the actual cash. This can create a cash crunch if not planned properly. That's why having a professional bookkeeper can help avoid surprises. Which method should you use? Here's the big question, cash or accrual, what's best for you? If you're a small, service-based business dealing mostly in cash or online payments, cash basis is perfect. If you sell inventory, deal with credit, or want accurate profits, accrual basis is better. If the law requires based on turnover or reporting standards, you must use accrual accounting. So now you know the difference between cash and accrual accounting, how each one works, their advantages and limitations, and which type of business they suit best. If you're small, service-based business, cash accounting is simple and efficient. If your business deals with inventory, offers credit, or plans to grow, the accrual accounting gives a clearer, more complete financial picture. With this knowledge, you are in a strong position to make smarter financial decisions for your business. If you are looking for a bookkeeper, we provide freelance bookkeeping services tailored to small and growing businesses. Check the description for more details.